Welcome back, NIO family. I wanted to get into NIO Stock, specifically the RSI on NIO Stock today, and give you guys a little bit of a lesson and a trend thesis that I was putting together that I think could be playing out currently. When you look at NIO Stock, I like to look and reflect on past price action, because although price action does not repeat entirely, it does not look the same all the time, right? But it does often rhyme, and typically the trend is your friend. With this trend being up, you have seen NIO Stock recently get into the bull zone, get into oversold or overbought, right? And you did something really, really important here on the weekly RSI of NIO that you have not done ever. For the first time in NIO's history, you've actually gained this resistance as support. And that is inherently a bullish thing. Looking back on the chart and the RSI, kind of overlaying it like that, you can see you tapped it here, broke above. That led to your massive squeeze up. You tapped it here. And then throughout this sell-off, you've been flirting with this downtrend in RSI for quite some time, over 4 years. You tapped it here almost perfectly, tapped it here perfectly, and then finally, the bulls have regained control. You broke above it and you retested and then shot into the bull zone of the RSI. Now, this is a very special thing, and you have the chance to potentially cool off here and then gain a test of this weekly RSI band for the first time in such a manner in which you had this uptrend in resistance, right, on the RSI, tapped it here, broke it, retested, squoze, and then came all the way back down, and you traded until you hit that RSI band, or you got a general retest into the all-time high of NIO. And you can see it respects it pretty heavily. You make another high, retest, high, you test it, you knife below it, and then you reject it and you fall. And you haven't truthfully really used it, besides for here, as a true support ever since. You squoze back up, support didn't hold. Squoze back up, support didn't hold. Didn't hold. Squoze up, held, didn't hold. Reject. Squeeze up, didn't hold. Squeeze up, held, double top, dump. Didn't hold. And so truthfully, this indicator, giving it some time to cool off and give us that opportunity of a beautiful retest that I would anticipate to happen sometime around here, right? Where rates are being talked about, that September 16th to 15th range, in which this has time to trickle up as the RSI can continue to cool off. You retest, and then you go to your beyond. One second. And then you have the opportunity to go to your high on the RSI, right? Because typically once you get into that 90 range, it's cooked, guys. Like you, not financial advice, I would be looking to take profit in that 90 range. And it does not look like it plans to scale back in any significant way, or at least not yet, right? Your chart is inherently very, very bullish still. And you're doing the exact same thing you had happen back here, right? Pump, test this, and then trade sideways and down on lower volume. And so this thing that we've had drawn up, this kind of bull flag or bull channel, right? The profit target from that would take you higher. Specifically, let's do this. Change that back to red. And then the breakout. depending on where this breakout happens, would depend on how high it would go. Let's say it happens next week, right? The 12th. And that would take you into that $8 to $9 territory. And I could see a story in which that happens, right? One negative thing that I'd have to cover, and I would be remiss not to cover, is you have bearish divergence on NIO's chart for the first time in a while. Oops, I accidentally overlaid. You have bearish divergence making a higher high in price, but a lower high in the RSI, right? So you can see price made this higher high, RSI made this lower high. So although it is not the end of the world, it would explain a little bit more of a macro or a micro pullback down to this gap fill here, potentially at 514 or 571. I think the 571 is more likely to fill, just trading sideways here and allowing for us to cool down before a larger move to the upside. And the move that matters to me, the move that is going to be critical on this chart, guys, is going to be getting above $7. And this is why, right? You look back to $7, very similarly to how we had mentioned 541 was the point of control to break on this stock. You rejected, you rejected, you rejected, you rejected, you rejected, and you just generally struggled to hold that location. Now, this is a time and a horizontal resistance in which you have always bounced radically from this point, right? So reject, bounce, reject, pump. This was your consolidation before you really squoze. This was to the penny bounce into an extreme rally from $6 up to 16. This was your bounce from 7 up to 10. This was your rejection. This was your rejection. And then now we have the opportunity to do something special here. So it truthfully, to me, it does not matter whether you do it here or you do it here or you do it even over here that you break 7, right? What matters is that you remain bullish, that you give these indicators time to catch up, and you hold making higher highs and higher lows. That is what matters on this stock. I do not want to see any silly break up and then just an absolute puke into a head and shoulders like you had back here. That is bearish price action. This undoubtedly 100%, in my opinion, is bullish price action. Not financial advice, but still, I mean, you just look at the two, right? You can see the bears overpowering bulls here. You can see it. You can see the bullish consolidation being made after each pump. Just silly moves, right? And then bullish consolidation. And then you would expect another higher high. So that's what I'm waiting on these charts. And I wanted to go over this because this is something, in my eyes, that significantly increases the probability that the Fed will cut rates. When the Fed cuts rates, I personally believe, and it is of my belief, that risk on assets will look to make higher highs, just like they did back when it happened prior to the Trump presidency and the Trump administration. November, October, you saw assets absolutely go crazy. Here you are now in the exact same situation in which the last time Jerome Powell cut rates was because the labor and job numbers came back as weak. And that's exactly what he quoted to being the reason this time when he was delaying not doing them. You've now seen it again going into the meeting in approximately like 11 to 12 days. And I don't think it's a coincidence that you have these charts ready to do something that they have not done in a very long time. You see this accumulative pattern. You see what could be this accumulative pattern. You are making the Bollinger Bands begin to bulge. And if I go to the 4-hour, that looks silly. Let's go to the daily. And if I go to the daily, right, this bull channel is very much still in play, guys. Now, you did lose the 9-day EMA, but you also did so back here, and then you regained it the very next day. You lost it, and then you regained it, and then you dipped one more time, and then you swung. But as long as you don't see any macro indicators like the 9 slicing through the 50, it is of my belief that you will continue to trade sideways until you either fill this gap or until you bounce off the top of it and confirm it as support, just like we talked about on GameStop, right? A lot of trading gaps, value gaps, can be used as defense and support by bulls and bears. If you'd like to see bulls support this level at 578, then theoretically 910 to 911 should be your time to get out of here and go into the $7 range. My only problem with that is then you leave a bunch of gaps that you'd have to fill later, and it'd be ugly, and I'd rather just get that out of the way, right? Another possible opportunity on NIO, and this would be where I would be interested in potentially adding a position. Maybe you come to the top of this channel, touch $5, reject the channel, and then you test either the top here, the top of this gap down, or this value gap, or, right, you give these indicators, these lagging indicators, time to catch up. And maybe the 50 is right there by the time you come down here. You bounce for the first time off of a daily golden cross. Let's look at the last time you had a daily golden cross before I elaborate on this. You almost had one here. You didn't quite. You almost did. Oh dear, my chart is tripping. All right, your last daily golden cross. So this was clearly a fake out, right? You had a breakdown, a break up, and a breakdown. That is massive indecision. But last time you had your true daily golden cross on NIO stock was back here. And look what you did. You did exactly what I'm talking about looking to enter from. You crossed it. And as you crossed it, you tested it, and you tested it, and then you squoze, and you did not return to the 50-day EMA until all the way back here after you topped out. Now, that's atypical, but just to show how valid of a trading strategy that is, you can see how well NIO stock has respected the golden cross. You can also see that it did it here into this run from $3 into $5. You tested it, you failed to hold it, and that's when you dumped. Death cross fake out, golden cross. And that golden cross led to, let's do the measurement. I'm not saying for reference that this is what it's going to do today. I'm just saying that this is an opportunity on NIO stock that in past, it ran 2,139%. If you guys had the opportunity to get on that kind of gain, why would you not? Right? That is my thesis, and that is my belief that NIO stock is either going to regain the 9-day EMA here and begin running soon, or you're going to see a little bit more of an elongated, played out test of this golden cross and fill these gaps. In doing so, you give the RSI time to cool down like we talked about, and then you make a very volatile and explosive move up to $10. That would be my goal on NIO, entering off this golden cross, and that is my conviction that I will be playing on. Not financial advice, guys. What else do I got? I did want to cover one more thing, but before I do so, I wanted to thank you guys for the continued love and support, especially on NIO stock. You guys have been amazing and really, really, really great. I mean, the amount of comments and engagement and love that I'm seeing from you guys on NIO made me grow a special place in my heart for this stock. And I wanted to say thank you. I want to say I appreciate you guys. And I want to say continue the love and support. Slap the subscribe button because we're not going anywhere. We're up to 321 in total subscribers. So we would look to continue. I'd like to be one of the best and most consistent YouTubers, even though I have a full-time job that is very demanding. I make extra time for you guys. So all that soapbox out of the way, let's get into AI stock, because AI stock, in my opinion, is a tremendous opportunity. You see at levels of $14 for the first time since back in 2023, guys. That predates a lot of this AI hype, and they just got a new CEO. They beat earnings, and you got a daily cross up on the MACD. Great volume. You're leaving gaps to fill. I think that this thing is going to do it. And if you scroll back here, right, when in doubt, zoom out. I'm sure there are so many people that are exiting their positions down here. I'm sure of it. But when in doubt, guys, zoom out. Just take a longer term approach. What do you see? Do you see what I see? The longest term macro downside resistance on this stock. You tapped it once, twice, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. You've tapped this thing now 13 times. You have the opportunity in this extreme support here, in this, you could call it a bull channel, right? You got this squeeze up, and you're still making a relative higher high within a bunch of lower highs, or higher low, excuse me, within a bunch of lower lows on the local chart. However, gain this channel, this downside resistance, and it is my belief that you are going to break $17. Maybe you reject 18, come back down, test, and then you're going towards $28. That is your last gap fill there at 28. Yeah, 28 would be my total price target on this thing. Considering you are trading near $14, that is almost a 100% play on AI. And I don't have to be the first one to tell you, AI is not going anywhere, guys. This bubble has not burst. You still have NVIDIA posting record-breaking earnings, and you still have NVIDIA being more than 10% of the overall S&P 500. Now, yes, in my opinion, not financial advice, that definitely is a bubble. But you have the opportunity now when you look at SoundHound AI, right? Great stock. When you look at NVIDIA somewhere there. When you look at these AI stocks, guys, this thing was just a month ago trading at $30. And you're telling me you get a beat on earnings and you're at 14? Yeah, right, man. Above that, right, you're getting bullish divergence on the MACD on the daily time frame. You see you made a lower low on the daily price action, but the MACD is making a higher low. I go to the weekly chart. Same thing. Bullish divergence in the MACD on the weekly time frame, and you're supposed to tell me that this thing is bearish? Have you lost the bloody plot? Oh my goodness. I will say the only bearish thing I see is the MACD crossing down in the monthly for the first time. However, I would anticipate that you bounce here up to this $26 to $28 zone. As this channel continues to play out, maybe this is the bottom, and then you go to $45. That would be, in my opinion, a more, I think there's the opportunity here for an Adam and Eve double bottom. I do. Into just the AI revolution that's coming, right? In case you guys don't know, Adam and Eve double bottom. I'll look it up right now. Adam double bottom pattern. these are some examples, right? You have a very sharp move down into a more sloped rounding formation. And when you go to chart patterns that show it, right, typically it's a V shape into an elongated formation. V shape, elongated formation into the breakout. That is what I think you have playing out on AI. This V shape into an elongated formation going into higher highs, in my opinion, not financial advice. So I do believe in this thing long term. So long as NVIDIA is strong, I think that this thing is going to be bullish. And you look at this V shape into this elongated bottom, it's my opinion that you will fill these gaps, take a breather, and then go again. And then at that point, hey man, do your own DD, take profits when you want to, what makes sense for you and your family. But this is just my coverage on the opportunity at hand. In my opinion, AI, a great stock right now. So that is all I have for today, guys. Make sure to slap the subscribe button. That is my call to action for you guys. I'm going to drop one more video. It's going to be my third video of the day. And I wanted to go over potential dividend stocks. So thank you guys for your love and appreciation. God bless each and every one of you. Get outside. It's a beautiful day to be alive, guys. Much love and peace.